Hi, Chris Picicurro, teaching tax flow. Welcome back. In this video, we are going to dive into AI. But what I'm really excited about is not only are we talking about AI and how it can help businesses operate, but also using AI and business technology as a tax planning implementation. So I'm welcoming back to the Teaching Tax Flow community, Caden Gunnell of Strategic Associates. Caden, welcome back. How are you doing?
Doing great. Always happy to be here with you.
Well, happy to have you. We've been working together in the teaching tax flow community for quite a while. You and the awesome folks at Strategic Associates. We've been working hand in hand and on in the private CPA practice a ton over the last several years. And since we started working together, we know AI is really implementing many different businesses. I could tell you in the tax business, I truly believe that tax firms that utilize AI are not going to be replaced by AI alone, but tax firms that use AI are going to replace tax firms that don't. So pretty much every business is touching AI, but beyond just understanding that and beyond and understanding how it can help you run your operations, how it can help you with a CRM, how it can help with research, you and the team of Strategic Associates have been working on an actual tax planning implementation that can help businesses grow and run, but also legally and ethically mitigate tax.
Correct. Absolutely.
Yeah, so tell me about this, this technology and
Yeah.
what you're seeing many of your clients do and how they implement such a platform.
Well, as you know, we work with all sorts of different types of clients. And this is specifically something that our business owner clients can benefit from because every business, from maybe something in home services to something professional services, it doesn't matter. They're using software to some extent. And we've been working with the company now for a little while, and they've put together a AI and technology package. And inside of this package, if businesses buy it for their business, our position is it will very likely qualify for just a 179 deduction, just like any of the other regular, ordinary, necessary business expenses would. Um, how it's become a tax planning tool is when they purchase this technology package at the business level, these business owners, there is a private uh, cloud-based AI that's actually HIPAA compliant, which is really cool. I
Wow.
use it for my personal business, much like very similarly to like a Chat GPT or something like that, but it's private. Okay, so that's really valuable for business owners for one thing. And then there's other technology package offerings, like a CRM, for example, or like a internal training program that they can purchase as part of these technology packages. But ultimately, we get those products valuated by a professional third-party evaluator, and they're worth a certain amount. But instead of paying full cash for that technology package, we just allow the business owner to finance it. And so that's how we kind of get similar to our other tax planning programs. We can create some tax benefits here by getting some leverage on our dollar. If we
Right.
put 20% down, right? Let's say $50,000 down, but a package of 300,000, that's a 1 to 6
Right.
write-off, right?
Right.
And so, again, we can see the tax planning benefits, but still also buy something we legitimately need for our business.
And this is something, if you're a business owner, think about, I'm not, no, first of all, I have a lot of content about how buying a vehicle is not a tax planning tool. So I don't want to go down. But if you think about, let's say you're a farmer and you buy a piece of equipment for $120,000. However, you put down $20,000 and you finance the 100,000. You actually could deduct using, like you mentioned, accelerated depreciation the
Yeah.
first year up to $120,000, even though you only put down 20,000. Now, that farmer though has to pay the $100,000 off over the course of time. In researching the programs that you're talking about, the benefit to the business owner is they can pay that note or that debt off using cash, but because of the technology that's involved, they can actually utilize the technology, and through that utilization, can service the debt instead of using cash. Is that correct?
Correct, correct. It's traditional financing and it's set up for 30 years. So again, you'll still have optimal cash flow if you were to just pay it off over that time. But there's a separate rewards program that's a part of this technology package. And our positions is that If you generate those rewards, those can be applied as a statement credit to a future loan payment. And so as you use the technology, if you're enrolled in that rewards program, those rewards, much like frequent flyer miles, I'm trying to think of an example, Delta, American Airlines, right?
Right.
If you generate points using this rewards points system, we can apply those as payments to the future loan payments. We can apply them as statement credits is the proper term.
And what type of usage qualifies? Just if you have
It's
an
really
idea.
gonna be yeah, in the CRM specifically, it would be actually using the CRM, but inside of it also, this technology package comes with educational videos for how to help you grow your business. And it's actually gonna give you access and exposure to things that can help you, and as you view those, the creator of this company is rewarding you with points for spending time on that education, because it's gonna be things that will help benefit him as he helps you grow your business also. And so that just to keep it simple, that would be things you do. It would be watching videos, for example. I've spent no more than maybe 5 hours this year, 5 to 10 hours or so. But it's stuff that's helping me grow my business, right? And it's I'm generating points by taking that time. And so then when my payment comes due, I can apply those reward points as a statement
Right.
credit.
And then if you enter people in your CRM or put in
Mhm.
workflows or tasks, those create some type of credits also,
Right.
from what I understand. And so in today's day and age, where does this start making sense for a business? Because obviously, as a business owner, and I've been a business owner for way longer than I'd like to admit, we could buy an off the shelf CRM, but we're really kind of leasing that software on a SaaS model. When your business gets to a certain point, it probably makes sense to make that investment into your own platform, like you're talking about. At what level, kind of investment wise, revenue wise, profit wise, does it start making sense?
As long as after all of your other ordinary necessary expenses, you're within your deduction limits, because with accelerated depreciation, there's certain limits. As long as there's still, revenue above that $500,000 mark, because the minimum purchase is 3 seats, which is a $50,000 down payment. That's enough income at high enough effective tax brackets to see the tax planning benefits. But even if you didn't have that, if you just wanted the software and you thought it was something your business could use, there really wouldn't be a huge minimum. But for it to make sense on the tax planning side, we'd want at least about $500,000 of revenue left after your other expenses.
Well, thank you so much. And thanks for watching this video, Teaching Tax Law Community. We have, if you're more interested in learning more, in the description, we have a little form you can fill out, or just leave a comment below. We will reply. Make sure you get in touch if it makes sense with Caden and his team at Strategic Associates, or maybe you just learned something and you're going to look into your own CRM and see if it has those type of benefits as well. So thanks for watching, Caden. Again, thanks for joining us.
You bet. Happy to be here. We'll see you guys.
All right. Thanks, everybody.